Hey Matthew, it's Simon Clarke. I'm the CEO of American Lithium. American Lithium is focused in two jurisdictions. We have two large development lithium projects, one in Nevada, one in Peru. We also have the world's fifth largest undeveloped uranium project, also situated in Peru. So a lot's been going on, and looking forward to update you as we go through the interview.
Good to see you again, Simon. We saw you back in July. Been seeing you've been banging out the press releases, so I'm excited about that. I want to talk to you about some of the things you've been doing there, certainly on the technical front. But I want to deal with your uranium project. Okay, it's looking like a smarter and smarter deal, quite frankly, given what's happened in the uranium space over the past couple of months. But it sort of begs the question: what are you going to do with it?
Yeah, it's a great question. And we obviously bought Plateau Energy, for the lithium asset, and the uranium came with it. I would also say we also bought it for what we see as an exceptionally strong technical team that had developed Falchani and took it through to battery grade, and we're now leveraging that expertise into what we're doing in Nevada. But yes, it was certainly great to pick up Macusani at the same time, fifth largest undeveloped uranium resource, and we think scope to actually build the value further in the short term. But clearly, it doesn't sit within a lithium producer. We've had a number of investors and shareholders say to us that we're never going to maximize value with it there, and we've always known that. So it's a question of timing. Our favorite approach is likely to spin it out, where we keep a significant stake in it, and have some board management representation, but also bring in potentially a really strong separate team, and it operates then in a standalone uranium company, which we think will ultimately attract a better valuation and be better for everyone. But we want to maximize things for our shareholders. We have had some people, approaching us with offers, and our sense has always been it's not yet the time. But I think with what's happening in uranium, we're probably getting closer to that time. And again, we continue to work the asset, and we think add incremental value as we go ahead here.
It's really interesting what's happened in the uranium space in the last couple of months. Obviously driven by your Spot Physical Uranium Trust, and obviously now others entering that space too. Have you been approached recently? Because we're hearing the M&A phrase mentioned more and more in this space, because there aren't too many decent sized projects out there to go after. This would probably qualify. We'll talk about, politics and legal and so forth in country in a bit, but a project of this scale is interesting. So any new interest in it?
Yeah, I mean, we had a lot of interest at the time we did the acquisition,
sure,
as you would imagine. And we had some of the usual suspects, I would say, coming out of the woodwork and lowballing and trying to do something at that stage. And with the guys we brought on, you have to remember Plateau was originally a uranium focused company, and they were exploring for further uranium on the Macusani plateau when they discovered Falchani. And so there's a lot of technical knowledge and expertise that their team has on it. So we didn't want to do anything knee jerk, and our sense was even back in April, May, you were starting to see the signs that the uranium side might be moving forward. So yes, we had those initial approaches. Subsequently, we've continued to have approaches every now and again, and obviously as uranium has heated up, there's been one group in particular, and then we've also seen some bankers start to approach us raising questions as to whether the timing is right now.
Interesting. Okay. I guess you'll let us know more when you know, but just coming back to your phrase, we'll do the best in the best interest of shareholders. That can mean two things. That can mean best interest now or in the future, because uranium's got a long way to run, it seems. Okay, we're up around we were up around $50 or whatever, it's slightly reset back down to now. A lot of the conversation seems to be right. It's going to be at $100 by the end of the year. It's going to be $200 next year. All the kind of very excitable, frothy language that has been used around it. What are you buying into in terms of what the future potential of this is, and versus cashing in now and then using that to get your lithium projects going?
Yeah, well, they did a really robust PEA, IRR pre-tax of 48% in 2016 using a $50 price. So the work that's been done since that, we believe would actually leverage that PA into a stronger PA still. So to our mind, it's just getting better and better. So I mean, we're comfortable. I don't necessarily buy into $100 or $200. I can't profess to knowing uranium enough, but I certainly could see it well above the numbers that the PA was done on long-term $50 price, which most of them are. In fact, it's quite conservative compared to a number of them. So to my mind, that's a target. And so there's two options. Do you hold on to it, work it, and then sell it to another group and bring in cash, as you said, to help develop the other projects? Or do you spin it out sooner into a vehicle where it's going to attract more attention and greater valuation and keep a good stake for the company? And that might ultimately be the best approach, because I think in a separate vehicle, I think it's going to be valued more highly as things move forward. So you just have to figure out the right time to do that. And so we wouldn't be afraid of doing that sooner if it was the right team and the right opportunity. But again, we're not going to do anything on a knee-jerk basis. And we have technical guys in the company who believe this is the best asset they've developed in a lifetime in the mining industry. So you don't want to give it up too early or without a lot of thought.
So if that's your preferred option, then that suggests to me that you're not necessarily going to spend too much more money on it now, but you'll wait to, like, say, shift it from a PEA to a feasibility or pre-feas, depending on which route you go, because there was a pretty robust PEA, and let the new spin-out company pay for that advancement. Is that in your head, or are you throwing money at this?
Well, in the short term, there's some short-term work that we can do with it. I mean, Cameco owned some of these assets and did a bunch of pre-concentration work. So when Plateau was originally called Macusani Yellowcake, it had a valuation of 125 million on its own before Fukushima. But there's a bunch of work that's been done on pre-concentration, where you reduce the mass to 88%, but you more than double the grades. So there's a lot of that PEA we think could be restated relatively quickly for a number of the steps that have been made in the interim. And as we announced earlier this week, there's also some really nice extension drilling targets, with average grades at surface of over 2% uranium. So we think there's some near-term work we can do, which makes sense to do as we consider, what options we're going to take here. But yes, I mean, I do think that at the right time, in a separate vehicle with a really strong management team, there's a lot of value that can be unlocked, and ultimately that will really benefit us and our shareholders if we structure it right.
So, and management team is really, really important. Okay, with all of these things, are we talking about the previous management team being allowed to go and finish the job they started? Or are you talking about bringing new management teams in? Because again, when we go out there and we look at some of the uranium projects out there, some great management teams, the good asset, they know what they're doing. And then there's some people just joining the party, right? So, investors will be looking at that. So have you got thoughts on either bringing new people in or?
I mean, as I've mentioned to you, Matthew, the technical team was the third asset in Plateau, and they've made huge impact on the speed that we've been evolving things in Nevada and our process engineering work and our optimization work. They've been really key in that, and it's been the knowledge they gained at Falchani and moving that to battery gate is now full bore on TLC in Nevada. So we're not going to lose those guys, but at the same time, the knowledge that they have of Macusani would make sense to whether they go on the board or have some kind of management role, but very much remain involved with us. We wouldn't want to give up those guys because the team we've got a really strong team now developed at American Lithium that we're not going to dismantle. But we think, we think they can do, they can add value on the uranium side still.
Perfect. Okay, that's what I want to understand, because to lose the technical nous that you've brought in to TLC, and also obviously with Falchani, I think would be a shame, and I don't know, possibly even concern people. But you're cognizant of that. Look, I'm excited about uranium. I'm excited to see what you decide to do. When would you be making decisions on that?
As I said, we're not going to rush. It just depends on what we see. What opportunities come to us. We're open to it, and we're open to discussing it. And it could happen in the next few months. It could take longer. I mean, we're going to continue to advance what is a great project, and look to ultimately create value. So we're not, again, I use the phrase knee jerk. We're not going to do anything knee jerk, but we'll certainly look at opportunities that come to us.
Okay, I'll wait to hear from you on that one. Now, I am excited about uranium, but I'm also very, very excited about lithium. There's been a lot of M&A activity going on, a lot of competition for M&A activity going on. The competitive tension is always very important in these things, get the right price, etc. Can you just give us a little update on what's going on with your two projects? Because we've seen you making a lot of announcements around the technical options. I think you've got 3 that you've announced. Have you settled down on one of those yet?
We're still going through the optimization approach on that. I mean, the obvious choice would have been sulfuric acid, which we get very high, as we've announced. We get very high recovery rates. It's high extraction of lithium. And it's a very tried and tested route that most of our peers use in Nevada. But the roast, which we started looking at later in the process, is very intriguing to us as well, because we still get high extraction rates, but the roasting process deals with a lot of the impurities up front that we deal with on that we then have to deal with on the sulfuric acid side. And it would very much lends itself to a cut and cover operation where you would quarry the lithium because it sits at surface, and one of the key economic drivers for this project is how it's hosted and the fact it's right at surface. So we'd quarry it, roast it, process it, and then you're effectively left with silica, which you can then backfill with very easy. So you minimize environmental impacts, which is key for permitting in the US right now, and and you minimize tailings management. You don't need a big acid plant. You do need a roaster, but lower CapEx. And we think there's lots of really interesting attributes. So we want to make sure that we do the work, Lawrence. Matthew. Lawrence is focused on that. Really optimizing these, and then really, what we don't want to do is come out with a PEA that just gets the technical grade. We could have done that months ago using sulfuric acid. We want to find the best option from an economic and environmental lens, using both lenses. And then we think that will drive a really robust PEA. So we'd rather take the time now and do the work. And as I say, that will then mean that, we're looking at PEA in Q1 of next year. But this is a piece that we really want to get right. We want to get the right mix, and then it will drive a really strong PEA.
But with the roasting, you're going to need gas, aren't you? And does that in itself bring problems in terms of permission to do that, and again environmentally?
Yeah, you have to permit it, but it's the gas is 60 miles away, and there's several utilities that are keen to do it. So it's definitely doable. The question mark comes: do you pay the CapEx, and so add a bit of CapEx to the roasting route, or do you pay a slightly higher long-term offtake with a utility that might move your operational costs up a bit? But again, we think the overall environmental benefits could mean that it makes sense. So, we have to finish the process. We have to do all the work, and then we will, select the best approach, again, from that mix of economic and environmental lenses.
Can we just talk about the environmental component again? Because we're seeing energy prices go up here in the UK. And then someone reminded me the other day of a survey which happened, I think, just over a year ago. Said, would you mind paying more for your energy prices if they're from renewables? Well, guess what? The rubber just hit the road over here. And it turns out the way people voted back then is not how they feel today. So for you, and if you get to the point when you're selling, choosing to a significantly more environmentally friendly solution, which may be a little bit more costly and therefore a little bit less margin, do you think buyers are prepared to pay, up for that? Is that the way that this ESG narrative is going?
I think to an extent. I mean, we don't know where the cost will ultimately come on the roasting option. I mean, we know on the sulfuric acid route, we fully believe we can get close to that 4,000 number per ton, which is, a key one in the industry. But we don't know yet on the roast, and you may be right. The natural gas side of it is definitely an input that potentially makes your OpEx a bit higher. But you look at groups like whether it's Tesla or Volkswagen or other end users, and more there is interest in solutions. You see it on the cobalt side, with dirty cobalt. So I'm not by any means saying sulfuric acid is a bad route to go. It's tried and tested. There's benefits to it. You don't have as much of a CO2 footprint as you'd have with roasting. You do steps to mitigate that, and roasters do get permitted in Nevada. And we just think the life cycle for the whole thing, where you don't have to deal with tailings, you can cut and cover, you don't have a big sulfuric acid plant, that kind of stuff might make roasting, the better approach on an environmental perspective, and might, you talk about the end users like Tesla and Volkswagen and other people, but the other key element is the regulators. What's gonna be the best approach to permit, and we will also have those discussions as well, because and again, that's why we brought Minviro in early to help us do the life cycle analysis. So we can look at sulfuric acid against roasting on an environmental basis and look at what truly is the better route from an environmental footprint.
Okay, so you've kind of got that discussion going on internally about higher or lower CapEx at the beginning versus higher or lower OpEx ongoing, plus the environmental premium that you may be able to get for it when you do come to sell. Is that right? Okay.
Absolutely. Yeah.
Okay. Let's just talk about Falchani and TLC, because there's obviously one you've acquired and one you already had, and you talked us through with Lawrence last time about his team's ability to come in and help you technically with TLC. But have you now got a sense of the order of play with the lithium? Do you focus on Falchani, or do you still stick with TLC? I mean, how's it advancing?
Yeah, I think Falchani was a little bit parked while we did the acquisition and understood it better, but also because of the elections in Peru and the process that's happened since that. And so we've started to see things revert to normal in Peru. Our communities are fully engaged. We have all necessary approvals there. We've put in the roads that we need to put in the roads. And as you saw, we were invited to go and meet the president in New York a couple of weeks ago, and we had a really good conversation with him and his colleagues around lithium, and they're very keen to see lithium developed in Peru within the course of his presidency. And so there's a lot of alignment there and a lot of support for what we're doing. And we were also reassured that a lot of the rhetoric that you saw in the election campaign around nationalization and expropriation was just that. It was rhetoric. And so that's very much now given us the impetus to relaunch things. And we've had a drilling program on the books for a couple of months down there, which we're now going to move ahead and launch. And so we will be doing a lot of work at Falchani as well. And if you look at development, Falchani is further ahead. And if we're going to get the support locally, I mean, Nevada is one of the best mining jurisdictions on the planet, but it's well publicized that the permitting process can slow these projects down. So, our approach is we like both. Falchani's further ahead right now, and could well be in production sooner. So,
we're going to keep driving both of them ahead.
Let me ask you about Pedro Castillo, because obviously, as you say, there's a lot of, and there always is, whether it's Peru, Chile, Ecuador, whatever, all this nationalism and nationalization rhetoric around the time of the elections or for the year preceding the elections. And we in the West react the same way. Oh my goodness, it's a potential socialist government. It's going to, the end is nigh, right? And then you come out the other side and go, it's business as usual. It needs to be business as usual within mining communities. But can I ask about that's something that we've been looking at and analyzing, talking to people about, and lawyers and politicians and bankers in those countries. But with Peru, with the mining constitution, with the constitution needing to be addressed, do you think that lithium is going to be viewed differently? Is it mining versus chemicals? Is any chance of any aspect of this being nationalized from your conversations in New York?
From the conversations I've had, no. I mean, I'm not a political expert, and as you know, you deal with whichever administration comes into power. What I would say is from his comments, he is very keen to see lithium developed, and he really wants to see lithium move into production during the course of his presidency. So,
but under what condition? But not under national control.
I don't know. I mean, if they're going to nationalize things, then I don't think they would ever get it through the parliament, because the parliament is center right, and you have to come to the center to do things. But I also believe that that's not what he wants to do. What I believe his interests are with the communities and making sure that there are jobs locally, and that companies don't concentrate lithium or other minerals and then export them out the country. He wants to see them developed and processed in country, and maximum benefits for Peruvians. And so I mean, will royalties go up? I mean, the way it is in Peru right now is royalties are relatively benign, and you work them out on a case by case basis, usually within 1 to 3, sometimes 5%. Maybe there's an increase in that somewhere along the way, but certainly I don't get the impression that there's going to be anything crazy done, as long as the projects involve the local communities, benefit Peru, and I think also are done in an environmentally responsible way. And that's the other thing about Falchani. I mean, it's in a region in Peru that has abundant water. You compare that to a number of the brine operations in South America, and a lot of hydroelectric power. So it's an area where Pedro Castillo has a lot of support, and it's an area he's committed to because of that. So I think our interests are very much aligned. We'll see. Again, I'm not a politician, so we'll see how things evolve. But certainly, given the discussions we had, it makes sense for us to launch our next phase of development, down in Peru.
Okay. Did those conversations also give you a little bit of renewed hope on the legal case that you've inherited when you made the acquisition?
That's an interesting one. We didn't talk directly to him on that. I mean, I know some of my colleagues who are down in Peru. Our general manager, Raul Solis, is very well connected politically. And so, he's had a lot of discussions on that. What we're told, and, you have to remember, the judiciary is separate from the political process. I mean, is there influence? That's above my pay grade. But, what we hear on the ground is that there's a strong likelihood that this will be resolved shortly, and we do expect it to be resolved in our favor. But again, until the judge makes the final pronouncement, you never know where things are going to go. But at this point, I'd say we're very optimistic that we'll see those concessions returned in the near future.
Okay, let's talk cash and warrants. I mean, what's your position at the moment?
We actually had a bunch of warrants coming in recently that were well in the money. So we're at about 17 million in the bank, 17 million Canadian. So we're in a good position. Obviously, these are all projects. As I've mentioned, our plans are to move ahead pretty aggressively on all the projects. So, at some stage, at the appropriate moment and appropriate market conditions, it likely will make sense to add more capital. And, it would be nice to have 2 to 3 years running room in terms of treasury, because that'll really help us just focus on developing these projects and the milestones and the news flow. So, Matthew, we're in no rush. We're certainly not desperate. We have more than enough cash for the next year. But somewhere along the line, we would probably look to bolster. And we still have about 12 million in the money warrants and options that will likely come in over the coming weeks and months as well.
Okay, so do the maths. If 17 gets you through the next year or so, you've got more warrants coming through. So if you did go to market, you'd be looking at the 30 to 40 million range?
Yeah, probably more like 25 to 30.
25 to 30.
That's kind of where we would, we would be. And again, we don't want to, over dilute. We recognize. I mean, I think for us, we're not here for big paychecks. The management and the board have good equity positions. Andy's always driven. Andy Baring, the chair, has always driven that. And we're aligned with shareholders. Where we make our real returns on this is through equity appreciation. And ultimately, whether we sell the company or move one or more projects through to production, we're going to do what's going to maximize the returns for the shareholders, and we're a big part of that.
Okay, well, look, Simon, I had a bunch of questions lined up about, we're talking about, cesium at Falchani and, Ganfeng and what's going on in the market and places like that. But what I'm hearing from you is there's a kind of planning and thinking phase that you're going through. So you're doing a bit of work, giving you some additional data, and thinking about how you tackle each one of these projects in what seems to be a fast changing market for both commodities at the moment. The lithium prices across the board are, shooting up. If anything, there's a slight disconnect with equities at the moment, which is the surprising component to this. And uranium, I'm always excited about. So I'm keen to see what you come back and tell us in terms of timing, order of play, allocation of capital, if indeed you do a fundraise, to give you breathing space to focus on development. Stay in touch. Let us know how you get on.
Yeah, no, we'd love to. And one of the things you mentioned, cesium, we will at Falchani update the PEA probably as an initial step to moving into feasibility. It's ready for feasibility, but the original PEA never incorporated cesium and potash, and there's a lot of interest in both. I mean, potash is imported into Peru, so it's another strong input. And as well as the work we're doing to upgrade, to extend the resource, but also move a lot of the inferred to M&I. We think it'll make sense to update the PEA before then immediately moving into PFS. But lots happening. As I say, we're in no rush for capital, but we're gonna continue to drive ahead on all fronts.
Brilliant.